Hello everybody, Shannon and Michael here with Healthcare Genius, and we have an important question for you today, and that is, when's the last time you reviewed your life insurance policy? If it's been a couple years, now's the time, and we're here today to outline really the things that you should be looking out for and the things that you should know at any time.
Yeah, Shannon, we hear from a lot of people that they just don't understand what they have when it comes to life insurance. You know, same thing happens with medical insurance, but really you should be able to recite exactly to your spouse or loved ones or family members exactly what kind of coverage you have and what the amounts are. So today we want to just go through and walk through some of the different points that you should be thinking about.
Yes, we have 5 points for you today. And at the end, if you stick around, we have another kind of pro tip for you. So the first thing we want to talk to you about is coverage amount. So Michael, why is that so important and how should you be thinking about the appropriate coverage amount?
Shannon, a lot of people, when they purchase insurance, they buy it and then they think they're done.
Yep.
So it's kind of the same with estate planning. They'll go ahead and get an estate plan done, and then 5 years from now, everything has changed. And that happens with life insurance. Maybe they buy a new house, they have children, kids in college, things that if something happened to them would really have a dramatic impact on their family. So it's important to know what the amount you have today is, as well as what should you have to protect both your spouse and your family from an income perspective?
Right. I mean, for a lot of people, as your income increases throughout your career, throughout your life, people want to be covered for all the expenses that they have today and that they might have at any point in time. So like Michael said, if you start having kids, if you buy a house, if you're paying for your kids' college, if you have expenses in life that are increasing, the amount of the death benefit of your life insurance should increase as well.
That's right.
So the second piece that we want to talk to you about is something that's commonly missed, and that's because it's a relatively new concept, and that's living benefits. So Michael, what are living benefits and how do they fit into life insurance?
Roughly 10 years ago, maybe 8 years ago, Transamerica was one of the first companies to come out with living benefits on their life insurance policies. And essentially what that is it allows you to draw from the death benefit if something catastrophic would happen to you from an illness perspective. So you get cancer or you have a heart attack or stroke, something that's going to impact your life expectancy. The insurance company then will take a look at that and they may give you a percentage of whatever that death benefit is. So an example, if you had $1 million policy, you had a significant cancer that would potentially mean that, doesn't mean that you have to be terminal, but that maybe you're only going to live 10 years or 12 years, something like that. Then the insurance company is going to look at that $1 million. They might write you a check today for $800,000.
Yeah, perfect example of that. I recently had some friends and their father, only in his mid-50s, it was really unfortunate. He ended up having this condition that was really rare. Unfortunately, their normal health insurance didn't cover some of the procedures that they wanted to do. And they actually got him accepted into a trial, which was a huge deal for them, but it ended up being $500,000 in cash that they were expected to pay. And they didn't have access to that kind of capital right away. But fortunately, they had updated their life insurance policy a couple years ago, so they were able to take that from the death benefit of this $2 million life insurance policy they had, put it towards the trial, and it was successful and it was great. They wouldn't have had access to that money otherwise. So it was a perfect example of why this can be so powerful. Now, do recognize that does lower the death benefit. So now eventually when he passes away, hopefully not for a long time, they'll still have a $1.5 million death benefit. So that's kind of how that works, why it's important and why we always encourage people to review their life insurance policies. If it's something that would be important to you, it's really generally not that much more expensive and can make a huge difference.
Well, Shannon, too, when you're thinking back to that point about how much you need, these living benefits really can factor into that. So you should be incorporating that into your planning because as you mentioned, a lot of medical coverage today doesn't necessarily cover you if you have to go out of network or if you have to go get some special procedures done. So living benefits can really change how you think about life insurance.
Yep, and health insurance. So for the third and the fourth point, we want to talk about the different types of life insurance that you might have. So for number 3, let's talk about term insurance and what's important to look at if you do have a term insurance policy.
A lot of people, when they purchase a policy, they might buy a 10-year guarantee period, a 20, a 30. Important to know that and understand it. We have a lot of people come to us and say, I just got a notice that says my insurance premiums are going to triple. It's because they ran out of that guarantee period.
Yeah.
Again, another reason to do a review so you're aware of that when that's going to come up. Sometimes we have individuals where they're no longer insurable. They have a health condition that's come up since they wrote that insurance. So it's really important to know what those terms are and where those premiums are going to go, because it can be prohibitively expensive to continue paying those premiums after they run out of the guarantee period.
Yeah, you hate to be boxed in. For most people, not having life insurance isn't really an option. So to be forced to pay 3 times as much for another term policy when yours is up is awful, but it happens all the time just because people aren't thinking about these things when they buy them.
It's the other reason that when you're buying term insurance, you want to make sure that the policy you're buying has conversion privileges, so that in the event something did happen, you can convert that to a permanent policy that can stay with you at a premium that's affordable.
Okay, so let's say you already have a permanent policy. First of all, what does that mean? And then what should you be looking out for in that case?
So on the permanent side, it could be universal life, index universal life, whole life, variable life. There's a lot of permanent products out there. So when you're looking at those, important to understand, especially when you're with universal life, variable, and index universal life, those are all dependent on certain interest rates. So you want to make sure that what you got when you originally bought that policy, you should have received an illustration that gave you some projections. There will be guarantees in some of those, but then some of them are not guaranteed. Again, a lot of people don't read these policies after they purchase them, so they're not really sure. You want to always be making sure you're on track and that the policy is on track, because we've had, in the last 5 years, there's been some insurance companies who have, on their universal life, have raised the premiums significantly, basically through the death benefit costs. And now people have premiums that they can't afford. And so this is the whole reason to always think about doing a review. You can go to your insurance company and have them run what's called an in-force illustration, which will then show you from today going forward what those additional costs will be.
Number 5 here is make sure that your beneficiaries are up to date. Maybe you bought a life insurance policy a few years ago, and at that time, the death benefit would have gone to a sibling, and now you're married. Or maybe at the time you were married and you no longer are. You want to make sure that your beneficiaries are up to date. This is so, so important, and it's something that people tend to forget about sometimes.
Also important to have a contingent beneficiary. We can tell you that when you're initially signing up for policies, and we see this with our clients, they may not know a social security number. They may not have been thinking about somebody else that they could leave it to other than the main person they want to leave those to. But it's important to have contingent beneficiaries on there, just in case something happened to the main beneficiary that you have. So always be thinking about that. The last thing you want is a policy, if something happens to you, to go to the wrong person.
The last thing that we want to cover, we call it a pro tip because unfortunately people are not thinking about it, and it can be extremely problematic, and that's thinking about what's going to happen to your life insurance policy when you retire. Michael, do you want to talk about why this can be problematic and what the big downfall is here and what people are doing wrong?
A lot of people, the only insurance they have is through their workforce. So it might be the employer paid life insurance or voluntary life insurance that they have at the workplace. Unfortunately, those policies, we never know until we look at them in detail, but some of them don't have a conversion privilege, some don't have portability. And even if they do have those privileges, the conversion, as an example, can be prohibitively expensive for a lot of people. So when you're doing your planning, it's important to understand what needs you might have when you're retired from a life insurance perspective, and then what's the best way to fund that, whether it be some sort of a term product or a permanent product.
Right. The last thing you want to do is think that you're covered, be covered for your entire career, and then turn 65 or whenever you retire, realize that you no longer have the coverage, which is most likely when you'll need it is sometime post-retirement. So make sure you're thinking about that.
If you haven't reviewed your insurance and maybe you don't have a current agent, we see that happen a lot, click on the link below to apply to become our client. We're more than happy to do a complimentary review of any of your or all of your insurance policies, and we'll give you a report on what those coverages are, and we'll make sure that when you sit down at the dinner table with your spouse or family that you can tell them what your benefits are, what the coverage is, and exactly how it works.
If you're not able to do that, give us a call, apply to become our client, because everybody absolutely should be able to do that. So thanks for watching. Feel free to leave a comment below and let us know what you think, or if you have any questions, and make sure you subscribe to our channel and click the bell to be notified when we come out with new content.